More about that in general.
More about the challenges?
Yeah, the challenges you face day to day in your job, because it seems that that even though you do a lot of fact checking, cross referencing, and everything, you still do have a lot of influence on the space, especially retail and institutional investors. So
is just to ensure that we are at the forefront of all the developments, because especially during the bull market there are so many things happening. And sometimes you look over there, okay, this is a new thing, you start covering there, and then you realize, oops, there's something new over there.
shiny object.
Kind of, yeah. So you are kind of in two minds whether I should target this one or that one. And if you take a vacation, let's say for 3 or 4 days, I mean, this happens with me a lot of times. If I'm out for a few days, I've never been out for more than 7 or 8 days perhaps. But I'm always checking out things on Twitter, even when I'm on holidays. But when you come back to work, it feels like you've never been a part of crypto market. This is something new. Yeah. So a week-long gap, and it feels like you're a newbie, total newbie. So I'm always telling my wife that I'm not going to stay away from crypto Twitter or Slack, or just I'm going to be in touch with the market even when I'm vacationing, because if I don't, week-long vacation will completely wipe me out, and then it becomes very challenging. Like when you return to work, you're like trying to gauge where do I start now? What did I miss? And it's difficult. As I said, we don't have Bloomberg, we don't have fact check, like continuous news services. So yeah, I mean, it becomes challenging then.
Are there any specific tips that you like to give to any specific, aspiring journalists who like to jump into cryptos, but especially covering the markets?
I think the first thing is, as exciting crypto is, it's still as dependent on macro as any other market is. So you cannot ignore macro development. I mean, macro can single-handedly make or break anything out there. And nothing in this world can remain disconnected from macroeconomics. So you need to pay attention to macro, and that's probably the reason why at least in India, whether you are studying commerce, engineering, anything, you need to have they make sure that you learn elementary economics at least, so you at least understand basic macro. That's probably the reason, because macro influences everything in crypto as well. So you need to pay attention to that. And the second is, again, the challenges that I mentioned, if you are into writing crypto, fact checking, being unbiased, always toning down your arguments. Again, I don't want to name anyone, but I read a lot of articles where they have like very strong opinion on something, and they're not quoting anyone, it's just the writer's opinion, and it comes across very strong. I believe in using words, toning down things so that you appear as neutral as possible and not emotionally involved into the idea, because if you get emotionally involved, then your perspective is going to go haywire. And the last one is fact checking. There's so much things happening, and there's so many projects out there, and I don't mean to offend anyone, but they are trying to solve the problem that doesn't exist.
We had a chat about this yesterday, actually.
I mean, you hear the project and then you wonder, like, but this problem doesn't exist. Why?
Yeah.
When you can eat this way, why do you want to put your hand all the way back to it? So many projects are literally doing this exercise. So you have to be careful, because that's not going to add any value to your own outlet and also to your reader, and it's just going to confuse them. And then when you're discussing complicated things, you always need to ensure that even the average reader would understand. So let's say I'm writing derivatives. So if you see my pieces, like I've written so many, I don't remember now, about options and futures, but every piece has a paragraph about what exactly call option means, or what exactly put option means,
yep,
or what are standard futures contract or perpetual futures, and how to operate in a very simple language. You cannot just go on writing high level words and then expect an average reader to understand it. He's going to be confused. And then also when you're discussing strategies, you're discussing what funds are doing. What I like to do is I always like to mention at the end that options trading is a risky business. And buyer beware.
Not financial advice, guys.
Yeah.
And are you going to be anywhere else in the next upcoming months in terms of attending events? Do you actually attend a lot of industry events in general?
Not really, very few.
Very few.
Yeah.
So it's rare to have you here, Token.
Yeah. Maybe I'll attend next year.
Yeah?
I'm really not sure. Like as I said, I take each day as it comes.
Are there any big crypto events in India?
We have a India Blockchain Week in Bangalore. I think it's in November. Might be there. I might attend that one.
Perfect, guys. We're going to catch Omkar is going to be there, so yeah. But Omkar, thank you so much for your time today. I really do appreciate it.
Yeah.
I love. No worries. I mean, at the end of the day, I love the fact that you've got your very strong opinions on the market, and that's why I do believe CoinDesk kept you very close to them, which is amazing. And yeah, I mean, where can we find you about your work? Do you have a Twitter?
Yeah, I have a Twitter, and the handle goes @GODBOLE17, and then I'm also on LinkedIn, Omkar Godbole, Facebook, Instagram. Yeah.
Perfect. And one last question before we go, and I know everyone's intrigued to know about this, but Omkar, how can people reach out to you? Are you very open to receiving information?
Yeah, absolutely. You can reach out to me on Twitter, Telegram. On Telegram, I'm capital G ODBOLE capital O MKR, and you can reach out to me LinkedIn on my email ID omkar@CoinDesk. I'm open. I'm
Perfect.
not sure if I'll be able to respond right at the next second, but I'll definitely come back.
Omkar's very busy, guys, but I do appreciate your time a lot. Guys, this is a wrap. We're Token 249 again. There might be a bit of noise around us, but this has been an amazing interview as always.
If you look at the sports shoe industry, every sports shoe supplier makes tall claims. They would say our shoe is best for running, it protects your knee, etc., and then they would say, oh, it's backed by research. But then when you look into who conducted or who financed research, is the same company.
Under a different name.
Yeah, under a different name. So it's the same thing here. Like there are shillers out there, right? And so you need to be careful. You need to cross check. Even in terms of macro data, let's say when I'm writing macro pieces, there are analysts out there who say, oh, inflation is falling. I do quote them, but then I try to get a chart, etc., that would validate their quote, support their quote. Maybe there is a forward-looking indicator out there which actually shows that the inflation is going to fall. Then that adds weight to the quote, right? It's same with all the products, new product launches, etc. I mean, they are right in their position of being optimistic, but as a reporter, or a journalist, or an editor, even as an analyst, or whatever role you are, fact checking is a big challenge in crypto.
Yeah.
And the second is when you're writing, you need to be careful that you don't grab legal eyeballs. You have to be very defensive and ensure that whatever you write doesn't fall. I would say doesn't create some legal mess. These are two other challenges, and the third one is with the blockchain data.
Yeah.
Yeah. If you're writing about blockchain analytics, it's very.
We talked about it yesterday.
Objective. The analysis itself is very
awesome. So we're back again. So perfect. So yeah, just going back to what you like reporting about. One of the most interesting things that happened in crypto was DeFi summer. Can you just go through that? From your perspective during that summer, how crazy was that for you? Because that, I think, was like the evolution of the markets in general in the crypto space. So I'd love to understand more about what happened there, and how much of that was important for you.
Yeah, it was great when it happened initially. The narrative is always great of decentralized finance or democratized finance, and the idea of a pure play of capitalism, this demand meets supply, interaction of demand supply forces, and community governance and stuff like that. So narratives was really great, and the macro environment was supportive for the narrative to thrive, because we had so much liquidity coming in from central banks, and then governments were handing out stimulus checks. So when the central banks print money, the first beneficiaries are usually institutions, And when governments hand out cash, the beneficiaries are on the main street. So you had demand from Wall Street as well as Main Street, and it led to DeFi somewhere. And there was so much hunger for yield with rates at 0% or -%. And the party continued for a year, etc. And then the issue today, we have Bitcoin back at record highs. Recently, it went to record highs in March. And so you are technically in a bull run, but the broader market is suffering, and one of the areas that's suffering is DeFi. And the issue today is, I would say, the government is no longer handing stimulus checks. There are no free cash coming in. We don't have youngsters and poker players and gamblers locked into their homes. There are no COVID lockdowns. So they're back to their work. So that gambling part is out. So I would say that demand pressure is gone. So that's one of the reasons why DeFi valuations are struggling now. The other is the big shift in the macro environment. We are no longer in the era of central bank dominance when it comes to credit creation. So up until 2020 or immediately after the COVID crash, we had central banks, essentially taking the decisions about, liquidity easing, liquidity tightening, etc. And that has a cantillon effect. So what it means is, the first beneficiaries of this high-powered money is high-powered credit is financial institutions, family offices, HNIs. And so when they have extra money, they are going to park it into risk assets, alternative investments like crypto, etc. The issue now is, at least for a decade, in my opinion, and I'm borrowing this idea from one Scottish economist, Russell Napier, and Arthur Hayes. So the issue today is we are in an era of government dominance when it comes to liquidity creation, because they are trying to get down the debt to GDP ratios, which have bloated to post World War II highs, and it's a big concern. So when facing such situations, historically they have gone back to bread and butter. It's reindustrialization, manufacturing, and so the focus would be to create more liquidity, targeted liquidity in these sectors of the economy, and not necessarily riskier ventures like blockchain or crypto. And because they want to keep employment high, give employment to in the lowest, I would say, lowest section of the economy. So manufacturing and services tends to have a high trickle-down effect as far as providing jobs is concerned, and that helps them boost their GDP. And at the same time, when the inflation is a bit higher than normal, it helps to inflate away the debt. So that's how they engineer, the environment that's conducive to bringing down debt to GDP ratios. In all this, the crypto struggles because it's no longer the case of money just coming into the hands of big investors and they're pouring it into digital assets. I would say DeFi and the wider altcoin market struggles because it's not connected to the mainstream yet. So it's not connected to, let's say, services industry or manufacturing industry, etc. Bitcoin has a mainstream connect because it's been touted as a digital gold, so there is a strong incentive to invest in the asset. But the other parts of the crypto market don't have that privilege yet.
Talking about that, because something that's really important is that the mainstream adoption of crypto, retail investors and so on as well. What are the 2 or 3 main topics that really interest you? Because I think we had a chat about this earlier because of Token 249, about the topics that were coming around, RWA, stablecoins and so on. So tell us more about that. What really excites you in terms of these topics?
I would say stablecoins and tokenization, because stablecoins are out there on Main Street, and I know for a fact that they're being used to move working capital across borders. And then I've also heard, I'm not going to name anyone, of course, but I know for a fact that a lot of companies out there, especially based out of countries which do not have dollar access, US dollar access, they're actually using stable coins for import and export, international trade. So that's a pretty strong use case, I would say. And then you have tokenization. Mm-hmm. So again, recently I heard a project, they are trying to tokenize government bonds in many countries. So what happens is, tokenization will ease out the process of investing into government bonds and probably, bring demand from the average retail investor, from the same country. So it might, if you look at the big picture, if this project succeeds, it might actually help highly indebted governments source demand for their debt domestically and not be dependent on foreign investors. This is related to what we are discussing. So if you open a textbook, it would say that stocks are riskier than bonds, and bonds, because they are backed by governments and it's a fixed income security, it's much safer. But this is what textbook says. But if you talk to an average investor out there on the street, he's going to say stocks are much safer than bonds because he doesn't understand bonds. Second, accessing bonds is relatively difficult than stocks. And the third is the liquidity content of the asset. So it's entrenched in the minds of an average investor that shares can be easily converted into cash. All you need to go is log into your trading account and then maybe press sell for F2 and you immediately have cash, right? He's not so sure about, average investor is not so sure about bonds. So so the demand for bonds from the average investor is low. When you speak of bond markets, it's usually institutions, big funds, etc. So if you tokenize bonds, probably it's going to ease out the process, and then the average investor is going to be more confident buying those. And if this process succeeds, you have average retail investor, pumping the money into bonds, and then that it helps highly indebted governments manage their debt better. They don't have to be dependent on foreign buyers. So just to give an example, Japan has a debt to GDP ratio of over 200%. So that's a big number, but it doesn't really matter much because much of their debt, is the government has borrowed mostly from domestic investors, and they could simply roll over the debt, right? It's not a foreign liability. But if you have a debt to GDP ratio of 200% and it's mostly, the debt is bought by foreign investors, then it's trouble.
But based on that, then I think that there's specific stories that it seems that you're very interested by, especially this current story you just mentioned that probably came in from a very specific source, a project that is already obviously building this. Are there any specific stories that you haven't covered yet that you like to cover, based on your current research about the market?
I would like to explore tokenization more. Maybe tokenization of commodities, if it's happening.
Is it happening?
I think, but it's
slow.
I mean, I was talking to a big issuer here in Singapore the other day, and he said, they are HNI investors and institutions. They're open to this idea, but they're not sure of how it works. Mm-hmm. It looks attractive on paper. Yeah. Then there is the tokenization of real estate. He gave an example of the real estate thing.
There's a lot of people doing that.
So he said that it's a lot of people are interested in that, but they're not actually putting their money because real estate is like a very paper-heavy business, I would say.
It is.
And then how do you fractionalize real estate? There's another question. Right?
Difficult, yeah.
So it's like the narratives are great, but then specifics are a bit difficult and things are kind of stuck there. But I think the whole tokenization scene is what I would love to explore more in future. And then you also have DeFi derivatives, which kind of I love derivatives, and so when DeFi is dabbling with derivatives, it makes it just more interesting.
Talking about derivatives, obviously, as a journalist yourself, you must have a lot of connections to specific sources of information. A lot of people dabble into speaking to PR agencies, using specific tools. I think when we met yesterday, you mentioned that you were using specific tools like DeFi Llama and so on to track TVL and so on as well. So specific stories that you're covering. Take us through kind of some of your structure when it comes to getting this news information in general.
About DeFi?
About everything, about DeFi, also about markets in general. What are your go-to-day products or go-to-day tools?
For DeFi, it's DeFi Llama and L2 Beat. I rely heavily on them, and then PR agencies and direct contracts at DeFi firms.
You mentioned you got really good connections at exchanges, right?
Yeah, I know quite a few DeFi exchanges as well. So it helps, it helps tracking their activities, getting latest maybe developments. And when it comes to other option stuff, derivative stuff, I rely heavily on Amber Data software. And then there is another one at Levitas, and you have Deribit Metrics. As far as macro is concerned, there's plenty out there, right? There are plenty of websites, FX Street, Daily FX, and they have really good economic calendars. And then I also get a lot of research reports from investment banks. So that's another source.
The best thing about it, and I think I've said this multiple times, especially with your job in general, is you really enjoy it. This is something I think you would even do if you just were even paid. I think this is something that you really care about in general.
I mean, if not in this market, I would be in some another market. back to foreign exchange, which I still love. Yeah, I'm into financial markets by choice.
What excites you about crypto?
As I said initially, my first crypto grabbed my attention because of volatility. I love volatility. I enjoy volatile times, and crypto was so volatile back then, and even it is today. Even if other things don't happen, just because it's so volatile, I'm going to be, some way connected to crypto. And then it's always, the another thing is innovation. Like, there's something new happening. Let's explore it. Let's see where it goes. You take each day as it comes. And you roll with the punches. That's it. And that's what excites me about crypto.
You've been in this market since 2017. I think you've been like one of the OGs in this space for quite some time now. There are other market, obviously, editors at other specific outlets like Cointelegraph, The Block, Decrypt, and so on as well. Just out of interest, do you guys speak between you guys as well in terms of sources of information? How does that work specifically with other outlets?
I haven't really spoken that regularly with reporters of other companies, to be very honest. Many of the top reporters at other outlets are former CoinDesk guys, so I kind of know them, but our communication lines have been, like, I would say they're not as strong as they used to be since they moved over there. But then within the company, we have great talent and great mentors. You interviewed Brad the other day, and I like working with Brad. So yeah.
What's the most challenging part of your job in general when it comes to these things? Because you mentioned that fact, information gathering and so on, day to day and so on. So tell us more. Follow Omkar's work on CoinDesk, and we'll catch you guys very soon. Cheers.